We have a very special guest today. We have my favorite Wyckoff educator, Roman Bogomazov. And I also want to say that besides being an exceptional educator, Roman is a superb trader. And he has taught many, many students the Wyckoff method, specifically oriented towards how best to trade with Wyckoff. And having said that, Roman, welcome to our program.
Well, Bruce, thank you, and I'm always happy to be here at the Power Chart. And thank you for the introduction. Although I must say that, judging by today's topic that we're going to discuss, we might be a little bit confused what the market is doing. So we will try to figure it out together, guys. And we are going to look at the market from two perspectives. So, Bruce, I'm looking forward to this.
So this is where we get the crazy bifurcated market. So it seems as though it's going in two different directions at the same time. It's not every stock is pulling in the same direction in a unified uptrend. So having said that, Roman, you're going to have this great workshop coming up where you're going to combine Wyckoff method with Elliott wave theory, and you're going to have the great Jeffrey Kennedy on with you. The two of you together are going to do this workshop. Tell us about it.
Well, yeah, two main ideas here. First of all, and Bruce knows this because Bruce attended those classes when Hank was teaching Elliott wave and Wyckoff methodology at Golden Gate University. We all attended those classes. It was a lot of fun, and Hank had such a passion for the synergy between those two methodologies. So he kind of started this whole idea of combining those methods. And then Jeffrey is just, in my opinion, one of the best, if not the best, practitioner of the Elliott wave method. And the way how he uses this is so practical. And he shows his trades. We're going to go through his trades. We're going to go through my trades. We're going to talk about the combination of how we would analyze the markets from both perspectives. And it's going to be a lot of fun. So
some of my all-time favorite classes, now this goes all the way back to my graduate school days, was taking Hank's classes, but also taking his Elliott wave classes. And then subsequently, he went to this Elliott wave and Wyckoff synergy class. And it's amazing how well those two methodologies work together, and they almost strengthen each other. And when you combine them in an effective way.
It's probably an idea of that both methods look at the price structure. And then you seek the confirmation of one over another. So maybe it's something that you're not sure using just one methodology, but the second one could clearly identify what's going on. So it's that synergy that Hank, liked. It's like in addition to the Wyckoff method, you could use the Elliott wave and vice versa. So it was a lot of fun.
So to sign up for this, you go to wyckoffanalytics.com. which is your website.
Okay.
So just to illustrate the point about the bifurcated market and why it seems to be so crazy here, is that you can see in this chart top left, going back, now this goes back to 2013, but this trend actually precedes that, is that it's a ratio or relative strength chart of a value ETF to a growth ETF. In this case, it's the Vanguard Value Fund and the QQQ NASDAQ 100 in a ratio, which is a relative strength relationship. And the line declining basically shows that growth is outperforming value and has been at least since the beginning of this chart, 2013. Now, an interesting thing has happened in a classic Wyckoff sense is that here in 2020, you had a climactic decline down into the bottom of that very large, well-defined trend channel, which created an oversold condition, a throw under of the channel, and then this magnificent accumulation structure of value to growth started to develop. And we've literally been tracking this since the fall of last year. And the chart on the bottom on the right is a close-up. It's a 4-hour chart of this ratio. And you can see as Roman is analyzing it and labeling it, you can see that it is a classic accumulation Wyckoff structure. Roman, what are your thoughts?
Well, first of all, I just want to acknowledge that Bruce started talking about this rotation from growth to value back in September. So can you guys imagine right here? So identifying that the trading range is starting. So that was idea number one, which in itself is a really great call. And secondly, that this trading range will lead to some kind of reversal. Reversal from what? Reversal from the long-term trend where growth was outperforming. And now out of this condition, we might have the reversal, maybe even like back to this line right here. So Bruce, I thought that was tremendous. The second benefit of this work that Bruce brought to our attention back in September was starting to label in the whole trading range in Wyckoff terms. So this is exactly what we've been doing in our classes following Bruce's work. And look where we are. We have passed through A, B, C phases, and now we've just had a very significant sign of strength where values just dominates over growth stocks. And then we had the backing up action, and now we are resuming this value outperformance. And it's because of these fluctuations in the trading range, Bruce. I think that's why we're talking about the bifurcated market, because the value goes up, then it retreats. While it retreats, the growth outperforms, and so on and so forth. So it's a really interesting but very difficult market from this perspective.
And it's very difficult because you have all of these years where trading growth and trading the trend in growth has been magnificently rewarded for traders. And then all of a sudden you have this rotation or this reversal, which shows up so well in this work, which is starting to show that value is becoming equal in performance, maybe dominating in performance. And this is making it very frustrating for traders to be able to participate in these markets because they have been rewarded to trade growth, and all of a sudden growth is maybe a little out of favor here. And so this is where we're going to go from here with our discussion today.
Okay. And let's start from the kind of negative side, from the growth side. And Bruce, another great call that you made just recently, like a week ago, you brought our attention to this ARKK ETF, which is basically, ETF for all of the growth innovation stocks that are maybe like second tier, as you said, growth stocks. But it's interesting that they were combined into one ETF. So it's a reflection of the growth through the ETF. So what do you see here?
Well, what we can see on the vertical chart on the left is there's a classic distribution, throw over the top of the channel there, and then a very hard break. That hard break into the March low is a sign of weakness and automatic reaction, and that set up a redistribution. You can see that each attempt to rally off of that automatic reaction low has been to a lower high. And so this has set up what we commonly call a hinge. And you can see it, and these are two converging trend lines. And so now, interestingly, today is that we're down to this really important support level, which you can see quite well on the point and figure chart on the right. And that point figure chart has just seen a decline that has taken it through the lows that were formed in early March at the 108 level. And so we've taken a count of the distribution area at the top and then the redistribution area in the yellow shading there. And we get a count on the redistribution down to 88 to 78. And so we have 88 to 79. And so you can see there that there is still room for lower prices. Now, that doesn't mean that that ARK fund and the stocks within it can't rally from here, but there's an interesting problem. And the problem that we have right now is that this is being a very large fund. It was as big as $52 billion, I think as early as recently as February, is that you have distribution or you have selling of the ETF by institutions and the public, and they're selling their ARK fund, and it forces the portfolio managers to sell the individual stocks within the ARK fund, which is a classic liquidation process of an index. And this is a sort of a form of a disruptive growth index. And so this really forces the portfolio managers to sell stocks across the board if they can, if there's enough liquidity in them. Ramon?
Yeah, I really like this pattern where we have kind of like the shortening of the thrust. This suggests that demand is exhausted. And then look how supply is coming in so strongly. So there is definitely a lot of institutional selling in this area. And that leads to a very, very pronounced change of behavior. Next rallies are very weak. They can't even come to about 1/2 of this reaction. So that shows weakness. And we are breaking the upslope in support right here. So on the increased supply signature again. So that shows again that a lot of the institutions are trying to get out of these positions. And I mean, as we have lower objectives, lower targets, we might potentially just go exactly there. So,
well, and there's quite a bit of support you can see down in that 79 to 88 area on the left side of the chart. So it seems like a really natural place for the market to go to. And that doesn't preclude the idea that there couldn't be a rally off of this support area that we have recently reached here around 106.
Mm-hmm. Yeah, I think with this idea, and we've talked about this in the Wednesday WMD class, it's all about timing. So, I mean, we most definitely seen a lot of weakness. We're seeing a lot of supply. We're seeing an ability of the demand to, push the prices up significantly. But the timing of this is going to be very important because after the sign of weakness, we usually have one last week rally. So we will have to see whether, this rally is going to materialize.
And that's commonly referred to as being under the ice. So that'll be, and it's a very specific kind of a price trading characteristic, is to trade under the ice. And so we'll be watching for that in the weeks ahead. Ramon, should we look at some of the individual stocks?
Yeah, so
what have you done here? This looks interesting.
Well, this is the holdings in this ARK fund, and which is going to look at the top 10, and they are the largest weight in that fund, the top 10. So, and Bruce, one of the things that we could see here was the stocks, which is very, very evident, is that all of them have some kind of change of behavior. So it's this big move to the downside where the volume signature is increasing. And that's a very, very common look for all of them. It's not just one, not just two, but all of them. So what happens next?
Oh, Ramon, I was just going to say here that what we're seeing, because there is a family resemblance among all these different stocks, is that they're all trading like they are in an index. And this ARK fund is like an index. And so you can see that the liquidations that are occurring seem to be characteristically very similar to each other because the portfolio managers are being forced to liquidate shares as they're getting liquidations of the fund at large.
Exactly.
Yeah,
Yeah.
go ahead.
So if change of behavior is kind of like step number one, step number two is inability to rally. And step number three, look at how we are breaking many supports here on many of them. Not all of them, but majority of them are definitely having that step number three, the break. Also, I want to point your attention to relative strength. So it's this line at the bottom here, and all of them are in the downtrend. And I think it's extremely important to notice. Bruce.
The only thing I would add here is that we are seeing both the Federal Reserve being very accommodative and also the you could say the Treasury or the administration has been doing a lot to put liquidity into the real economy. And so even though these stocks have the potential to go down on a swing trading basis, I could see the opportunity out here somewhere, maybe when point figure counts are reached, where these stocks could become good trading stocks again. What do you think of that, Ramon?
Yeah, absolutely. It's just right now, a lot of Wyckoffans are kind of like trying to catch a spring type of situation. Well, you have to be really careful
Yeah.
because with the springs, when you catch this spring in the uptrending environment, that's when it's going to work 9 out of 10 times. When you're trying to catch a spring in the downtrending environment, it will work only once in 10 cases, and it's going to be the actual bottom. And I'm not sure, Bruce, that we are showing or registering the bottom here. I would be.
I would agree with that. And I would only add to that, that in each of these cases, we are looking at a redistribution off of the peak. So big break, redistribution, and then a commitment down in an attempt to put another leg down on. And that's where we would look to do point figure analysis of these redistribution areas to see how much potential there is for further decline in each of these stocks.
Well, if we are going to have some kind of weakness, which could lead maybe to some kind of even shakeout in growth stocks, then we need to look at NASDAQ 100. And here's an analog. So this is NASDAQ 100 futures. This is a daily chart, and this is 2011-2012 chart, 2010-2011. And we've entered after the momentum rally off the 2009 low into a trading range. So it's kind of interesting how it develops in a similar way. So for instance, like this reaction right here, 1, 2, 3, that's the structure. And I'm using 3-hour chart, the current chart here for NASDAQ 100. 1, 2, 3. Then we have a test as a higher low, a test as a higher low. Then we are rallying to the top of the resistance here, into the resistance, and then we are going into somewhat of the distributional pattern. And look how we are going down. So it's not like we are very aggressive, but we're going down. So and we kind of see that probably from yesterday's today action. We could have potentially a total washout in NASDAQ in growth, and it's going to influence other sectors as well. But for now, I would say that where we are in the structure is just a trading range. And within the trading range, you're always going to have those fluctuations. And until we have a final absorption, final decrease in volatility, we can't really participate long-term to the upside. We want to be selective and we want to be short-term oriented.
Fascinating. So this could be a trading range for some period of time into the future based on this analog.
Well, Bruce, if somebody wants to still be very active on the bullish side. I mean, like there are so many themes right now, and that's why we're calling this a bifurcated market. There are so many themes, sectors,
And
groups, stocks.
I believe that this is a function of the fact that there is so much liquidity in the system
Yes,
right now.
absolutely.
Yeah.
So for instance, commodities is just, having probably one of the best markets in some time that we've had. Look at corn, and this is from Bruce's blog. So Bruce, please walk us through this.
So this is a classic accumulation structure on the left on the vertical chart, and it's so large for this continuous contract for corn futures that it goes all the way back to 2014, which is where the selling climax occurs, automatic rally, the market becomes range bound after a bear decline, and look at the amount of time it's spent building a cause, an accumulation cause for an important run up. And so what I find really interesting about this chart, Roman, and we haven't really had a lot of time to talk about it, is how large phase B is, because phase B is where you get a lot of trendless trading, which builds a huge point and figure count for an important cause building process for an important move. And you can see that on the chart on the right, which is a 3-box reversal chart of that whole area back to 2014. And look at the count that we have. So from the low, which is a beautiful spring and a test, it counts up 820 to 895 for the first segment, segment A, and then 1180 to 1255 for segment B. And we're only around 675 right now. So there's huge potential here for corn going forward. Now, I don't recommend that people trade the futures markets because they're very volatile and have a lot of leverage, but it tells us an awful lot about the environment and what investments are being favored right now.
Yeah, beautiful chart. Just want to add here, our colleague and friend David Wise, who passed away last year. Corn was his favorite market, and so as I was talking to him in preparations for the tape reading sessions, he was showing me his setup, where he was trying to get into corn, and obviously, it started moving and in his favor. So that was a very interesting call by David.
Wow.
Okay.
A great Wyckoff.
Absolutely. Okay, well, another theme, Bruce, that is on the opposite side of growth is energy. And I mean, look at this rally right here since the end of October. And when we look at the way how the price moves, there is a lot of momentum buying waves that we see. And then the reactions are somewhat shallow. And every time reaction happens, we see some kind of diminishing supply character. And whenever the rally is happening, we're seeing some kind of demand coming in and increasing in size. So this is such an interesting theme, and it's definitely opposite to the story of the growth.
Well, and in this chart on the left, the point and figure chart was one that we did at the beginning of the year to show this as being a favored market for performance in 2021. And that certainly appears to be working out that way. Look at this count potential, 79 to 95. And at the time, this chart was around 40, 41. And so you can see that we're now up around 50 and a half. This is the chart on the right, the vertical is about a week old. And so energy is definitely one of those rotating value-oriented themes. And notice the beautiful shallow backup that's occurred in March, April. So, and now it's attempting to pivot off of that and turn up.
All right. Well, another theme, or other couple of themes, industrials and transportation. And if you look at this theme, you would probably never even know that something is going on, Bruce.
Well, and of course, the real economy runs on transportation. So you have to, ship things and move things and look at what's going on here. Top left chart is the Dow Jones Transportation ETF, symbol IYT. Look at that really beautiful uptrend and the persistency of it as it just keeps grinding its way higher and higher, which really indicates the economy is rolling along on transportation stocks.
And one of the stocks, that we would look in that particular group is UBS, and look at, first of all, the initial push up that we see here. This was a very, very aggressive rally with a lot of momentum, with gaps up, with a lot of demand coming in and increasing. And then look at the shallow nature of the reaccumulation. And there's no aggressive selling in this formation. Maybe somewhere here, but right away, as supply occurs, the price stops at the support. And then after that, we only see, diminishing supply character. If supply comes in, again, there is no ability to go down, to follow through to the downside. And off we go, breakout, another gap, and it's still extremely strong behind the increasing demand signature.
It's such a beautiful chart. It's like that April jump out and then the very tight, shallow pause above resistance is just such a telling feature in this chart. And then look at the explosive volume as it starts to just really almost become a vertical climb. Really a beautiful chart.
All right. Well, Bruce, I think we've done everything for what we wanted to do for today.
Fantastic. Well, we if anything, I would really just want people to consider coming to your wonderful workshop. Ramon is a great trader. He's taught many students how to be really good traders in the market using the Wyckoff method. And I believe that I intend to be a student and attend your workshop with Jeff Kennedy.
Well, thank you, Bruce, and thank you, everybody.
And Ramon, thank you for being here, and we will see you all next week.
Oh, my pleasure.